Let's talk a little bit about the depositors. The other part of the government response was to say, hey, if you're an uninsured depositor at Signature Bank, you're good. We're going to cover FDIC is going to cover 100% of it. Hey, if you're an uninsured depositor at Silicon Valley Bank, your cash is also safe. The FDIC, backed by the U.S. taxpayer, is going to cover 100% of it. You're good. Now, this opened up a lot of questions about, okay, so are you de facto guaranteeing 100% of uninsured depositors across the industry, from small banks to medium-sized banks to the largest banks? Is that basically what you're saying? And Jeff Stein asked them this question right away. They wouldn't really give an answer. So Senator James Lankford asked Janet Yellen, Treasury Secretary Janet Yellen, this exact same question, and the response is pretty stunning. Take a listen.
Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVB just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk.
All right, so let me interpret that for you. She says banks only get that treatment if the FDIC board and myself determine that the failure to protect those depositors would create systemic risk. That means basically screw you to small banks.
Yes.
Okay, one of the problems that was posited here in very aggressive terms of why you had to backstop all the depositors at SVB and everywhere else was basically, and this was a reasonable case to make, okay, if you're a depositor and you have all of this money uninsured in SVB, and you're looking around at, a shaky banking financial system, what are you going to do? You're going to pull your cash, you're going to put it in the largest banks because they're too big to fail, and you'll be on more solid ground there. So they're saying there's going to be this huge capital flight of depositors from the mid-sized banks into the large banks. Well, why doesn't that same reasoning apply then to small banks? Because now you have basically, they've said, okay, well, the mid-range of banks, I guess they're too big to fail as well. So we're going to backstop all of their depositors. So if you have a large deposit at a small bank, then why wouldn't you be thinking the exact same thing of, I got to pull my cash and I got to move it up the food chain to one of these institutions that is going to be backstopped by the Fed? Now, I don't know, because I don't have, those numbers aren't publicly available, whether that is actually happening or not. And there's some reason to believe that it may not be, because bank deposits are really sticky. It's a pain in the ass to move your money. You got all your auto pays set up. So people tend to just be like, we'll figure it out. It'll probably be okay. And by the way, the overwhelming majority of people, the mean bank account is only $5,300 anyway. So they would be covered by the FDIC insurance. But this is a real screw you to small banks. This is saying we are going to give you special treatment if you are a certain size. We're going to give your depositors special treatment if you are of a certain size. And the small banks are incredibly angry about all of this.
Well, as they should be, because really, as you interpreted it, what she is saying is that the feds are now going to pick winners and losers in the banking system.
Yeah.
The too big to fail banks, as they define it, not Congress, are the ones that now have unlimited deposit insurance. Credit union, like he's saying, of Tulsa, you're screwed. Sorry, you're not systemically risk. And here's the other one. Who are the people most likely to use those small credit unions? Those are locals, small business owners.
Actual small businesses.
Farmers, like real small, like I'm talking like you said, like a hardware store that's barely floating on a 2% profit
that doesn't have
margin.
like a wealthy VC that could float them a bridge loan if they get into a cash crunch.
They have 5 guys who work there, so they have 5 guys who work there. They're trying to make ends meet. Every once in a while, they have to go through their banking system, and relationship is purely built on a guy that they know there at the bank. If that bank goes down, that actually is devastating for the community, but it's not, quote, systemically risk for the entire global financial system. Ergo, it doesn't now qualify. So it's just simply not fair. This is giving the big guys the greatest gift they could ever have, which is the government saying our bank can literally never fail, when all of the smaller banks, what's their incentive now? Sell. You should just sell. to, First Republic or any of these people, sell to PNC, sell to JP Morgan Chase, and have an even more of a roll up in the financial. So that's exactly what you want to avoid. Credit unions in this way are, they specifically avoid much of the risk.
Yeah.
I mean, that's why they don't fail as much. And now they're effectively being penalized for it by regulators. It's not right.
Yeah, I 100% agree with all of that. It really is not right. There's another piece of this that has, well, before we get to this, one thing that really grossed me out, Saagar, is I saw Silicon Valley Bank. They were actually like recruiting depositors based on the fact that the FDIC is backstopping all of their deposits. They were putting out, missives that were saying, oh, there's no bank in the country that's safer than us at this point.
Right.
Because we got the federal government guarantee. Like, these other people, yours mid-range, you might be betting on, okay, are they going to decide we're systemically important or not? But we know 100% that Janet Yellen and co. have said that we are. So your deposits are absolutely safe in this bank. There is no safer bank in the entire country, which again demonstrates what incredible gift the public, driven by the government, has given those banks in particular, but any bank that is their size or larger in general. There's another piece here, which, last week we talked about how the Fed was just asleep at the switch. Like, these were obvious problems. There were tons of short sellers who saw that this was an issue for Silicon Valley Bank. It was not complex in order to understand, and yet they didn't intervene. They didn't do anything before the S hit the fan, so to speak. So let's put this up on the screen. New York Times is reporting that actually the Fed did spot some problems at Silicon Valley Bank ahead of time. Now, I read this. Let me give you the details, then I'll tell you how I interpreted this. They say Silicon Valley Bank's risky practices were on the Fed's radar for more than a year, an awareness that proved insufficient to stop the bank's demise. The Fed repeatedly warned the bank that it had problems, according to a person familiar with the matter. In 2021, a Fed review of the growing bank found serious weaknesses in how it was handling key risks. Supervisors at the Federal Reserve Bank of San Francisco, which the CEO of this bank sat on that board, put that aside, issued 6 citations, those warnings known as matters requiring attention and matters requiring immediate attention, flagged that the firm was doing a bad job of ensuring that it would have enough easy-to-tap cash on hand in the event of troubles, but the bank did not fix its vulnerabilities, et cetera, et cetera. So I read this in 2 ways. First of all, I feel like it's an attempt at Fed ass covering because they have come into a lot of scrutiny and a lot of criticism for their, complete failure to see this coming and be able to deal with it before it became a complete crisis. But it also, in some ways, is even more embarrassing because it's like you knew there were issues. You issued your little well, we're sending you a warning, but you didn't actually do anything. And I think this speaks to a larger problem within Fed and other, banking supervision and regulation, which is effectively since the Greenspan era and in the era of market fundamentalism, neoliberalism, whatever you want to call it, there was really this shift in philosophy where regulators were going to see their role as making sure the private sector had sufficient transparency and information for them to hold the banks accountable and do the due diligence that in previous eras, in like the New Deal era, that the regulatory bodies did themselves. Well, for one thing, shareholders have a different set of incentives than the public does. That's one thing. They're more risk tolerant than the public is ultimately. But number two, the market is also not perfect, it turns out, and they can miss a lot of things as well. So the Fed taking that hands-off, laid-back approach, sent them their little notices, but didn't actually intervene or do anything to stem the crisis before it became one.
Yeah, and the fascinating thing is, let's put this up there on the screen. I really enjoyed reading this, is that the crisis sparks a new battle between small and large banks. The Independent Community Bankers Association of America, which represents the nation's smallest banks, is now coming to Congress to make the case that they should not have to pay for the rescue of bank depositors and that the largest lenders instead deserve stricter oversight from regulators. The group entered in early Monday saying that Silicon Valley Bank and the nation's largest banks are not community banks, specifically pushing back against the idea that they are the ones who will now have to pay. The way that they would pay, as I've laid out before, is that the FDIC almost certainly, with this new guarantee, is going to raise the amount that all banks are going to have to pay into the FDIC system. Yeah. Something I'm totally fine with if you're JP Morgan Chase. But again, the likelihood is you almost certainly, and I, the actual customers of said banks will be the ones who bear the brunt. But these independent community banks are like, we don't want to pass these fees on to our customers because we're charging them on a fair system. We're not doing anything risky. Why should we have to pay for this? Pretty fair point, if you ask me. And instead, as Yellen laid out, I'm in the business of saving the big ones. The little guys and all that, you basically have no defense here.
Yeah.
You have no insurance.
That's right.
Yeah.
So the little guys are going to help subsidize FDIC insurance to cover 100% of the deposits at mid-range and higher banks. They're like, how is this fair? This is insane, especially after Yellen came out and said directly, like, no, little guys, no, you're not part of this deal. Don't even think that you are. So, yeah, I can see why, and I think justifiably so, they are absolutely outraged by this state of affairs.
And they should be. And so it'll be a brewing fight. And look, if Congress really did its job, we would have real hearings on this. We'd have a real investigation.
Yeah.
We'd have a full report that was delivered to us.
New regulation.
I just don't see any real path to that. So I really do feel for the little guys because their prices or their customer fees and FDIC fees, regulatory scrutiny, all that is going to go way up, and they didn't do anything. They did nothing to deserve it.
Warren and Katie Porter are sort of leading the charge to try to pass, to re-regulate, because part of this story is obviously some of the rollback in regulation. Right. And so that would be important. But I have to say there's a whole philosophical shift that has to happen in terms of regulators who are not only way too cozy with industry, but have this, odious philosophy that says basically like, we're not really the regulators. It's actually the private, the shareholders who need to hold these banks to account. So there's a whole philosophical shift that needs to happen as well. Hey guys, ready or not, 2024 is fully upon us now, and Saagar and I have been brainstorming ways that we can really up our game for this critical election.
Yeah, we rely on our premium subs to expand our coverage, to add staff, to upgrade the studio. We just want to give you the best independent coverage of this election, which is possible. So if you can help us out, become a premium subscriber today, breakingpoints.com, or the link is down here in the description video. It really means the world to us, and if you like what we're all about, this is the best possible way to keep us 100% independent, working only for you.